Hi, this is Zak Mir with the Bulletin Board Heroes here on Share Talk for Sunday the 21st of March. Starting off with Braveheart Investment Group, where we had a decent rebound on Friday. It was a double bottom basically with the initial March support at 52.5 pence, the low on Thursday at 53, so slightly higher low there. And all we're missing out on here really, I suppose, is a break of the initial March resistance around the 80 pence area, but with the break of that resistance line from earlier in the month around the 69 pence level, above that we're looking for a partial or even full retest of that late February peak through 100 pence. Hopefully that can be seen sometime by the end of next month. At this stage, only really well below the 50-day line at 60 pence, really delaying the upside scenario. Conduity Capital is next, and here it was a slightly difficult situation, maybe slightly disappointing so far, given the way that the shares had several attempts to poke through the 200-day moving average. That's around the 2.93 pence level. That's the black line there on the daily chart, and we had multiple attempts at sustaining that level, and now we've pushed back below it. The other important part of the daily chart, I suppose, is the way that got neckline support there at 2.5 pence, and on Friday we managed to close back above that, so it does suggest a potential bear trap rebound for the stock, and at least while we're above the low of Friday at 2.2 pence, we've got the possibility of a move towards the top of the rising trend channel from November up to 4.5 pence by the end of next month. If you want further confirmation of a recovery here, that would come in the form of a break of that February resistance line and the 200-day moving average at 2.9 pence on an end-of-day close basis. On to Eurasia, where we're still waiting for something to happen, but at least the shares looking relatively firm. They've been in a range, I suppose, from 24 to 32 pence in the recent past, and right in the middle of that range now. Nice close on Friday above the 50-day moving average, but the real view here is above that uptrend line there from last year, running around the 24 pence level, also level with a 200-day moving average above 24 pence. We're looking for at least a retest of December resistance through 40 pence, and perhaps up towards that July resistance line projection at 60 pence. Presumably, though, if there is no positive news, the 24 pence level would be broken quite dramatically. But let's see how we do with Eurasia. On to a stock which is rather more obscure, but is here for charting educational purposes. A great rally that we've had here for Eenergy Group. I suppose it started at some point in the autumn through in October when we broke through 7-8 pence. We've been rising steadily ever since, but the highlight here for me, the gap through resistance in February, that was through the old January peak at 15 pence, rather a bit higher than that, actually 16 pence, and we've never filled that gap. Higher low above the top of the gap there, at 15 pence, and the new high there, a new low there rather at 16. Current position is that we're looking forward to a top of September trend channel target as high as 35 pence by the end of next month, and the way things are going, perhaps even by the end of this month, given the fact that there has been an unfilled gap there, and that tends to be a multi-bagger, potential multi-bagger opportunity. Probably you might want to imagine where the shares might go after 35 pence. At the moment, it looks as though they could hit as high as 50 to 55 pence at a line of resistance from the beginning of January, at the top of that steeper January trend channel. So breaking 35 up to possibly as high as 50 pence over the next couple of months for Eenergy. Onto a stock where I think it's really about the fundamentals rather than the technicals, with Fox Marble and its alleged potential 195 million euro court case win. But in the meantime, we do actually have a charting signal here, or a technical signal. We gapped up higher last week, and we have remained, that gap has remained unfilled, which is a positive. It can be seen, that is something that can be seen ahead of a big positive move in the market. We saw that with Futura Medical at the beginning of this month, and obviously we've seen what has happened there. So that could be a sign. A gap off the lows can be a very positive sign for a stock, as it indicates that the bears are being caught off guard, at least while there's no end of day close back below the gap at 1.8 pence. We're looking for perhaps a return to the top of the range at 2.6 pence. Best case scenario target, if we get something from the court case that the company is currently battling, would be as high as 4.5 pence on a 2 to 3 month time frame. But that would be after breaking that line of resistance around 2.3 pence from back in May. Moving along to another favourite in the mining area, Greatland Gold, and here a bit frustrating that we've been stuck around the 20 pence, the main 20 pence support here. That's been in place basically since October. Presumably this offers range traders a decent opportunity in terms of buying at support, but at this stage probably just want to see an end of day close back above the 200-day moving average. That's just around the 22 pence level before assuming a new leg to the upside can be sustained, even though we can see 20 pence has been good support there of late. On to a stock which is relatively rare for this sweep, but here we've got Litigation Capital in a rising trend channel from back in May. Top of the channel currently pointing towards £1.15, and that could be seen over the next, well, perhaps even as soon as the end of next month, while there's no end of day close back below the old August peak at 80 pence. So a reasonable risk reward trade there on a technical basis at Litigation Capital Management. Onto a stock which isn't really a charting situation, but is just worth keeping an eye out on, maybe on a fundamental basis. Here we've got Marvin Acquisition, which is clearly a stock which is delivering high hopes in the tech space. Here we can see that we've broken that main 3 pence resistance, and the longer we stay above that, the greater the chance of a move towards the top of a 2018 price channel target as high as 6 pence over the next couple of months. But just want to keep an eye on, given that we don't really have any proper volume and spread, etc., etc. On to a stock which I haven't looked at for a while, Pelatro, but it's looking encouraging in the sense that there's been a break of this resistance line from August at 40 pence. That happened on Thursday, and above 40 pence, looking for at least a move towards the 50 to 55 pence area, which was the gap area back in the summer. Big picture target here over the next 2 to 3 months perhaps is the top of a rising trend channel from December 2019 as high as 80 pence, and that is valid, as I said, while we hold above 40. If you're looking for further confirmation of the upside, maybe wait on an end of day close above the 200-day moving average at 43 pence. On to a stock which is again one of the more obscure ones. Here we've got Trident Royalties. Nice bear trap rebound for last week, and I suppose for the month of March. The previous February support at 34 pence, we went down to 33 this month, so a minor bear trap. Waiting to see whether we can get the shares breaking a line of resistance from the start of the year. Just around 38 pence should do it, I would think. I mean, even if you could even take Friday's close as a positive, but 38 pence plus, and shares of Trident Royalties could hit the the June resistance line projection as high as 65 pence on a 2 to 3 month time frame. Moving along to a stock which I don't think I've ever looked at before, but will be familiar in terms of the name, Timeout to most of us. Here we've got, I suppose it looks as though the shares are finally anticipating an end to the lockdown, and what we had on both Thursday and Friday was, well, first on Thursday we had a gap through resistance, which is one of our favourite setups and can indicate a multi-bagger move. Friday confirmed it with the close above Thursday's peak, and also resistance from December, and obviously the gap remains unfilled, so that is a very positive sign. While there's no end of day close back below December resistance at 43 pence, looking towards a top of April trend channel target as high as 77 pence on a 1 to 2 month time frame at Timeout. Finishing off with Transcendence, which I haven't looked at for a while, but saw somebody on Twitter talking about it, or talking about something related to it. Here we've got Transense Technologies with a gap through resistance, which remains unfilled. from February, and that was through the 60 pence level. Already made good progress, and looking for further progress towards £1.20 or £1.25 at the top of a rising trend channel from December, and the upside valid while we hold above that old February peak at 78 pence, so above 78, up to £1.20 potentially for Transense Technologies. That's it from me today. More updates tomorrow.